Something feels off in the mountains right now, and you notice it before anyone explains it. Ski lodges sit dark on weekends that used to buzz. Vacation rentals glow empty at night. Scenic highways are lined with fresh for sale signs that weren't there last season. Even during peak months, these towns feel paused, like someone turned the volume down without telling anyone. For years, mountain living was the dream. Fresh air, postcard views, rental income on the side, and the comfort of believing these places were immune to downturns. People paid premiums gladly, convinced demand would always be there. But in 2025, that dream feels thinner. Not shattered, not dramatic, just quietly missing. Buyers didn't storm out. They stepped back, checked the math, and stopped showing up. This isn't a crash you hear about first. It's one you sense. Listings refresh instead of selling. Price cuts appear, then stack, without reigniting interest. Homes that should feel rare now feel optional. When demand leaves softly, outcomes tend to follow later, not immediately. That's what makes this moment dangerous and revealing at the same time. These mountain towns didn't collapse loudly. They drifted into trouble after prices outran reality and payments stopped making sense. The silence is the signal. Before we go any further, subscribe and hit the bell, because these shifts don't announce themselves, and staying ahead matters more than reacting late. This video isn't here to scare you or kill the mountain dream. It's here to sharpen your awareness. We're going to walk through 10 U.S. mountain towns where demand has slipped into freefall, not as headlines, but as behavior. 2 towns on this list shocked me, and they challenge the belief that mountain markets are always safe. Once you recognize silence as a signal, decisions slow and strengthen. In the last few years, it was hard to ignore the excitement around mountain towns. From the outside, everything seemed to be running smoothly. Scenic vistas were being sold like real estate gold. Ski towns became weekend hotspots for second home buyers, and the promise of remote work gave even more people the freedom to escape to these idyllic getaways. But then something changed, quietly and almost without warning. The steady influx of buyers slowed to a trickle. And the reason? A combination of factors that no one predicted, or maybe no one wanted to acknowledge. The first blow came from payment shock. For years, buyers had stretched their budgets, lured by the dream of owning a slice of paradise. Interest rates were low and houses felt like they were always appreciating. But then, in 2025, the Federal Reserve raised rates. For many, what once seemed like a manageable mortgage suddenly ballooned into an overwhelming weight. Those second homes, the ones people were so eager to buy as vacation spots, were now costing far more than anticipated. And when the bills came due, the reality hit hard. The second problem, the price tags. These homes were no longer affordable. The combination of a booming real estate market and the allure of remote work led to prices skyrocketing, especially in popular mountain areas. Buyers jumped in without realizing the toll it would take on their wallets, thinking the dream of the mountains would always be worth the premium. But when the economy shifted and remote work demand quietly reversed, those buyers started rethinking their choices. What once seemed like a great deal now felt overpriced. A house that might have been a bargain a year ago no longer seemed worth the investment, especially when maintenance and insurance costs skyrocketed as well. And while short-term rentals were once a golden ticket, they started to show their cracks. As more and more properties became available for rent, the market got flooded. The saturation of vacation homes for rent meant less income for owners. And many owners who once thought they'd make a killing off short-term rentals suddenly found themselves with higher than expected vacancies. Rentals that should have been a lucrative business now felt like a gamble. And for some, it was one they weren't willing to take. So what does free fall really mean in these towns? It's more than just declining prices. It's about a quiet, creeping halt in activity. Transactions are drying up. Homes sit on the market for months without even a nibble. Sellers keep cutting their prices, hoping for an offer, but those price cuts aren't bringing the buyers back. Listings cycle over and over again without making progress. It's a slow-motion collapse, where every price drop only makes buyers more hesitant, reinforcing the idea that waiting might be the safer bet. When you talk to these sellers, they still remember the good times, the days when bidding wars were the norm, when buyers would line up to pay the asking price. But that was before the math caught up. Buyers aren't acting out of emotion anymore. They're looking at numbers, and right now, those numbers don't add up. The dream of mountain living is still there, but the financial reality is becoming impossible to ignore. This might sound like a lot of doom and gloom, but it's not about panicking. It's about being realistic. These shifts aren't about sudden crashes or dramatic collapses. They're about a market simply hitting its limits. As buyers begin to step back, recognizing that these places no longer align with their expectations, sellers who can't adjust fast enough will only find themselves waiting longer and longer for offers that won't come. If this already feels familiar, make sure you're subscribed. The pattern repeats more than people realize. This isn't just happening in one town, it's sweeping across the country. The takeaway here is this: it's not about reacting out of fear or overpaying because of a good memory or emotional attachment to a mountain town. It's about understanding the shift and waiting for the right moment to make a move. Buyers who are sitting on the sidelines, refusing to engage until prices align with their reality, will ultimately be the ones who make the smartest decisions. And for those who jump in without realizing the math isn't in their favor, the consequences may be regret when it's too late to act. This market isn't moving quickly, and that's actually the opportunity. Once you can read the signals, payment shock, short-term rental oversupply, price drops, and the silent retreat of demand, you'll be in a stronger position. It's not about rushing in. It's about making a decision that aligns with your reality and not the one you wish were true. And as we dive deeper into this, stick around because next we're going to explore which towns could still be hiding hidden opportunities if you're paying attention. Don't let this quiet shift catch you off guard. As we dive into this list, it's important to understand how these towns are ranked. This isn't a popularity contest or a list based on how beautiful these places are. It's based on something far more telling. The rankings are determined by what I call signal stacking. It's a method of looking at multiple signs of decline that, when combined, tell the real story about a market's health. If we're going to make sense of this situation, we need to break down these mountain towns into different categories, each representing distinct behavioral patterns in the market. First, we have luxury ski resort towns. These towns used to be the epitome of exclusivity. Think Aspen, Vail, Park City. The ultra-wealthy flock to these locations for winter sports, stunning views, and high-end amenities. But as interest rates climbed and the economy shifted, the once unshakable demand for second and third homes among the wealthy started to falter. Buyers are hesitating. The homes here were always overpriced, but now, with the economic reality setting in, the numbers no longer align with what buyers are willing to pay. These once thriving luxury markets have begun to show cracks, and it's only a matter of time before the weight of those cracks causes a deeper fall. Then there are the second home vacation hubs. These towns were the ultimate weekend escapes, places like Lake Tahoe or parts of the Catskills. They were once seen as affordable alternatives to luxury ski resorts, but with remote work in full swing and people eager for quick getaways, the demand spiked. However, as prices soared and interest rates followed suit, buyers in these markets started to pull back. Vacation homes are becoming liabilities, not assets. Sellers who once thrived in the bidding wars are now stuck with listings that just won't budge. Next, we have the remote work boom towns. These towns saw an influx of buyers during the pandemic. People could work from anywhere, and why not choose a mountain retreat with wide open spaces, clean air, and a slower pace of life? These towns surged in popularity, but that demand has now slowed. The reality of long commutes, high living costs, and unstable home values are starting to make those remote work dreams feel like a financial burden. Buyers are no longer lining up for that peaceful life, and the market is quietly stagnating. And finally, legacy mountain communities. These towns weren't built on the notion of high demand or luxury real estate. They were simple, steady places where locals lived and worked. But as larger towns became more crowded, people started flocking to these smaller communities, hoping to live the mountain dream. For a while, things looked promising, but the affordability issues, paired with a lack of modern amenities, have made these towns struggle to maintain any real market traction. Now, the way we've ranked these towns is by stacking signals. Factors like declining demand, homes sitting longer, price cuts that fail to bring buyers in, and a shift in buyer attitudes. It's not just about the decline in prices, but the subtle yet powerful signals that show us where the market is truly headed. And let me tell you, the final three towns on this list completely break the mountain town safety myth that so many people still hold dear. Stay with me through the list. The last three change how you see mountain real estate. You won't want to miss where they rank and why it matters. When you drive through these mountain towns now, you feel it before you even see it. There's an eerie calm, a silence that wasn't there before. The streets, once lively with tourists or locals out for a stroll, now look abandoned. The ski lifts that were once packed with people eagerly waiting for fresh powder are now still, almost like they're waiting for something to change. The vacation rentals? Still listed, but you can feel the difference. There's no buzz, no urgency. These towns, which once represented the dream of mountain living, now seem to be slipping quietly into decline. They're not at rock bottom yet, but the cracks are visible and they're growing wider. The once coveted properties in these areas have turned into listings that sit stagnant, waiting for someone, anyone, to take a chance. And here's the thing, it doesn't have to be too late. You still have the option to recognize these patterns early and act before it's too late. That's the power of observation. If you can see where the market is heading, you can make decisions that protect you from regret. Let's start with number 10, Breckenridge, Colorado. A town that used to shine brightly as a mid-tier ski destination, Breckenridge now finds itself caught between its past appeal and an uncertain future. The homes here used to be snapped up quickly, with visitors eager to buy into the mountain lifestyle. But now, listings are languishing. The price cuts that sellers thought would revive interest are just stacking up, and still buyers hesitate. Why? Because they're no longer buying into the dream. The days of easy investment in ski town properties are gone. Buyers are more discerning, asking themselves, is this still worth it? Are the prices really justified? If you're considering this market, pay attention. The longer homes sit, the harder it gets to avoid the regrets of overpaying. Moving on to number 9, Lake Tahoe, California, Nevada. Once the golden child of remote work havens, Lake Tahoe represented the idea of the perfect escape, natural beauty, easy access, and the promise of a better life. Remote workers flooded in, buying up second homes, dreaming of their cozy cabin away from the stresses of city living. But something has shifted. The listing prices have remained high, and with rising interest rates, many potential buyers are now stepping back. Prices that seemed reasonable a year ago now feel like an overextension. Sellers have started offering incentives like closing credits or rate buy-downs, but it's not enough to turn the tide. Buyers see the changes, and they're hesitant. They're no longer feeling FOMO. They're feeling fear. Fear of overpaying for a dream that may not be as stable as they once thought. For those watching closely, there's an opportunity to buy in a market that's slowing down, but only if you act before the final collapse. Number 8, Jackson Hole, Wyoming. Known for its luxury homes and high-end appeal, Jackson Hole is a place that once promised exclusivity and unmatched beauty. The town was the epitome of mountain living for the wealthy and famous. Now, though, there's a shift happening. The listings that used to sell quickly are now taking longer to move, and the price reductions? They're no longer surprising, they're expected. The town is feeling the crunch of a luxury market that's slowly becoming oversaturated, and buyers who once jumped at the chance to own here are now sitting on the sidelines. It's a subtle decline, but a decline nonetheless. The luxury buyers are holding their cards closer, uncertain of what the market holds, and as a result, homes that once had strong demand are now sitting without much attention. The lesson here is simple. If you're looking to buy in Jackson Hole, the time to act is now, before the market shifts even further and sellers start to truly feel the sting of overpriced homes. And then there's number 7, Park City, Utah. Park City, once a major player in the world of ski towns, now finds itself struggling with a slow decline. It's not crashing, but it's certainly not booming. Listings that would have sold in days are now sitting for weeks, sometimes months. Sellers, once confident in their asking prices, have started to lower them, but that hasn't sparked the rush they expected. Buyers are more cautious than ever, wondering if they're paying too much for something that might lose value down the road. The allure of Park City's lifestyle hasn't disappeared, but the appeal of overpaying for it has. The market here is in a quiet slide, and if you're not careful, you could miss the signs that warn you of what's to come. Buyers, take note. The longer you wait, the more likely it is you'll be left watching the market with regret. These towns still hold potential, but they're on the edge. Each of them represents a stage in the decline of mountain real estate markets. Not a crash, but a quiet slide into stagnation. The opportunities are still here, but they're getting harder to spot. Sellers are still holding on to the belief that demand will return, but buyers are waiting, watching, and wondering if they'll get a better deal tomorrow. If you're finding this useful so far, subscribe. It only gets clearer from here. Recognizing these early signs can mean the difference between a smart move and a missed opportunity. Don't let the quiet slide fool you. There's still time, but it's running out. Keep watching, and let's dive into the next phase of this mountain town freefall. At this point, the decline is no longer subtle. In these towns, buyers are no longer surprised by price cuts. They expect them. What was once an unexpected opportunity has turned into a regular occurrence. Homes that once flew off the market are now gathering dust, relisted again and again, with little more than a price drop to show for it. Sellers, desperate for movement, are offering incentives, closing credits, home warranties, even discounted rates. But these efforts are not sparking the urgency they once did. And the buyers? They've gone quiet. You might even hear them say, "We're just waiting for the right time," but that time doesn't seem to be coming anytime soon. Take number 6, Aspen, Colorado. Aspen was once the ultimate symbol of luxury mountain living. With its high-end homes, celebrity sightings, and stunning views, it was the place to be. But now Aspen is a victim of its own success. Prices have been driven up to unsustainable heights, and the reality is settling in. Buyers have pulled back. Sellers are cutting prices, but no one's biting. Relisting is becoming the norm, and the price cuts aren't enough to convince buyers that it's worth it. The problem isn't the town itself, it's the timing. Buyers are simply unwilling to pay the premium for a second home here, not when the numbers don't add up. The reality of the market has hit, and it's clear. Aspen needs to adjust to a new price reality before buyers start engaging again. Now let's talk about number 5, Telluride, Colorado. This town still has everything you'd want in a mountain getaway. Breathtaking views, an intimate community, and a history that speaks volumes. But now the market is struggling. Homes are staying on the market for longer than expected. Relistings are frequent, and the same homes are getting freshened up, priced lower, and then nothing. The incentive offers pile up, but buyers are still hesitant. It's not that Telluride isn't a great place to live. It's that it's not the great deal it once was. Buyers are waiting for clarity, but it's hard to get excited about a town that's been priced out of reach for so long. For this market to turn around, price expectations need to align with reality. Buyers are waiting for that shift, and they're not willing to make a move until it happens. For 4, Park City, Utah presents a similar picture. Park City was always one of the best-kept secrets in mountain towns, offering luxury ski access in a tight-knit community. But now it's trapped in a loop. Price cuts, constant. Longer negotiations, absolutely. Buyers still come through, but many walk away after inspections, which seem to be revealing more than expected. The luxury homes are no longer as enticing as they once were. The town's charm remains, but it's not enough to counterbalance the numbers. Buyers are holding back, and sellers are desperate to close deals. It's a situation of cognitive dissonance. A great town, but bad timing. The gap between buyer expectations and seller prices is too wide to ignore. And so, Park City waits for change. For things to shift back into balance, buyers need to feel that prices are truly aligned with what they're getting. The same pattern keeps repeating in these towns. Buyers are not rushing in anymore, but they're also not pulling away in a panic. Instead, they're waiting for the right price, the right deal, the right time, and sellers are feeling the pressure. They've watched the market slip, and now they're in full resistance mode, offering incentives, adjusting prices, and trying everything they can to get buyers interested again. But until something changes, until the market adjusts and buyers feel comfortable making a move, these towns will continue to slide. The lesson here is clear. The longer these towns sit in this resistance zone, the harder it becomes to reverse the trend. Sellers must get real about pricing, and buyers must understand that the deals they're waiting for are still some time away. But for those who can recognize the signs early, there's an opportunity to get ahead of the game. Don't wait too long, or you might regret missing the shift when it happens. Before we get to the final three, hit the bell. You'll want to catch what comes next. Stay tuned for a look at the towns that have fully entered freefall, where all buyer absence signals have stacked, and the market is no longer a place of opportunity, but a quiet, ongoing retreat. When you step back and look at the bigger picture, the same patterns emerge across all these towns. It wasn't a sudden crash, a loud collapse. No, it was much quieter than that. Overpricing met payment reality, and the result was a slow unraveling. Prices soared as buyers, fueled by optimism, stretched their budgets further than they should have. What seemed like a once-in-a-lifetime opportunity quickly turned into a heavy burden when interest rates rose. Suddenly, the dream of owning a mountain getaway became an unattainable goal for many. But that wasn't all. Short-term rental, STR saturation, added another layer of pressure. Once, vacation homes were a safe investment, a lucrative alternative to traditional rentals. But now the market is flooded. Buyers who saw these homes as cash cows suddenly found themselves in competition with an overabundance of rental properties that didn't move fast enough or provide the returns they had hoped for. As a result, what once felt like a safe investment became a risky gamble. Meanwhile, inventory crept up. Homes that used to fly off the market now sat. Listings lingered, and the longer homes sat on the market, the less urgency there was to buy. Buyers took their time, waiting for prices to drop further, holding off on making any decisions. With no urgency pushing them forward, they simply watched from the sidelines. The market became stagnant, and in that stillness, the free fall quietly began. What all these towns share is not drama or sudden collapse, but an undeniable shift. A shift from a thriving, bustling market to one where hesitation and waiting became the new norm. And if you can spot these signals, you're ahead of the curve. Overpricing met the reality of what buyers could actually afford. STR saturation removed the safety net. Rising inventory increased competition, but with no urgency to act. And slowly but surely, the freefall set in, almost unnoticed. So how can you apply this framework? Simple. First, look for price reductions. If listings have been on the market longer than expected and sellers are offering price cuts without generating offers, that's a sign. Next, check the rental market. Too many short-term rentals competing for a shrinking pool of buyers? That's a warning sign too. Watch for rising inventory, and remember, no urgency means no sales. When these signals stack, it's time to reconsider your position in that market. Recognizing these signs early can help you avoid bad decisions and make smarter moves in the future. This framework alone can save you from a bad decision. Stay subscribed, and you'll continue learning how to read the market before it's too late. If you're watching this, you've already started to see the patterns. And that's exactly where your power lies. The market is shifting, and for those who recognize it early, there's still time to make moves that protect you, or even put you in a stronger position. Whether you're a first-time buyer, a second home seeker, or an investor, this moment is about making strategic, not emotional, decisions. For first-time buyers, patience is your greatest asset. The fear of missing out is strong in a market like this, but rushing in could cost you. Right now, your power lies in being patient, waiting for sellers to make concessions, and for price reductions to stabilize. As homes sit longer, confirmation signals will start to appear. Buyers who wait will be able to negotiate from a place of power, demanding better terms and ensuring that the deal is right for them. Understand that the market isn't going anywhere. It's just adjusting. So, take your time, look for the signs, and know that your patience will pay off. Second home buyers, it's time to get real about cash flow. Mountain properties were once seen as easy sources of income with vacation rentals. But with STR saturation and rising costs, it's critical to assess the financial realities. Can your property generate positive cash flow? Or are you just buying into the dream? Consider maintenance costs carefully. Will the property be worth the investment after factoring in repairs, utilities, and other expenses? If it's not, step back and reconsider. Realism is your friend, not just wishful thinking. The best deals will come when you don't get swept up in nostalgia or false promises. For investors, the game has changed. Vacancy risks are higher now, and liquidity, the ability to exit quickly, is more crucial than ever. What looked like a great opportunity a year ago might be a financial burden now. The days of easy returns are over for some areas. Look at market trends closely. Is your property likely to appreciate, or will it linger? Make sure you have a clear exit strategy, and remember that selling too soon can hurt more than waiting. Keep your eyes open for signs of future growth, but also consider the worst-case scenario, holding a property that no one wants. Reframe patience as power. It's not a passive waiting game, it's a strategy. As others rush in, the wise ones will wait, observing, calculating, and then moving when the time is right. In the next video, we'll dive into which mountain towns buyers should be avoiding next and where the smart money is quietly moving. So, don't miss out. Subscribe, comment your town below, and let's analyze it together. This community is here to learn, share insights, and stay ahead of the curve. You're not alone in this, and together we'll navigate these shifts with confidence and clarity.